Elon's going to keep running, but he didn't start Tesla. He didn't start SpaceX. I mean, he's a quick copier. We were early investors in this company called Grok. If you invested on the new moon and sold on the full moon, you would make 1,400 times more money.
Are you still of the view that we are in a technical bear market, or do you think this is just a dead cat bounce? And how are you reading the market right now?
Whether we stay in a range between 80 and 100 or 80 and 95, that's possible. The big dogs can hold the price down. Gold was basically dead money for almost 5 years. JP Morgan had to pay $1 billion fine for spoofing the price of gold.
Do you think it will have a blow off top in the AI?
Bubbles usually inflate longer than you think they can.
Do you think that Bitcoin will get caught up in this and dragged lower?
Great question. Great question. So the short answer is
GM, GA, and GE, depending on when you are in the world. And welcome back to another podcast episode here on the Coin Bureau. Now, today, our guest is Mark Yusko. He is the CEO and CIO of Morgan Creek Capital Management, and he's also an early and prolific crypto investor, and we're very happy to have him on here. So, Mark, a very warm welcome to the Coin Bureau.
Oh, I appreciate you having me on. It's an honor to be the first show of the new year. So, Happy New Year, although I guess today may be the last day we can get away with saying Happy New Year. It is the Feast of the Epiphany here on January 6th. So that's kind of fun.
Fair. To be fair, though, although if you first time you've seen someone in the new year, I think it's still customary to do it. Although if it's past January.
I'm with you. Although with the number of people that I don't do a good job keeping up with, I'd be saying Happy New Year in July sometimes.
That's true.
But
that's true, yeah. Anyways, before we kick off, guys, a few quick disclaimers. Nothing in this episode is financial or investment advice, so please consult the disclaimer in the description for more information and consult your investment advisor before making investment decisions. Now, Mark, let's start off with what is going on with the market right now, more specifically Bitcoin. And as you mentioned, you're the first guest of 2026, so hopefully we can kick off with a bit of a bullish bang depending on where you positioned. Because you recently, I think, said a few months ago that Bitcoin was in a bear market. And I think many people had been saying that as well, potentially even a crypto winter, but different like any other. Given that now we're 6 days into January and it seems as if the markets are perking up, Bitcoin's at about 94K. Are you still of the view that we are in a technical bear market, or do you think this is just a dead cat bounce? And how are you reading the market right now?
No, it's the question, and it's interesting. So, before we got on air here together, I was starting my process every year in January. I do something, called the 10 surprises as a nod and an honor to Byron Wien. He was the first guy that did this at Morgan Stanley and then years later at Blackstone. God rest his soul. But Byron was this great guy, great analyst. And a number of years ago, maybe 10 or 11 years ago, someone said, "Hey, you should do that." I'm like, I really don't want to do that because then you can be wrong. And long story short, I decided to do it. And I really now enjoy it because I spend a couple weeks kind of figuring out what consensus is and then coming up with some ideas that are contrary to consensus that, may or may not happen. But if they do, you can really profit from. So long story short, I was looking at the consensus for Bitcoin prices. And I think the consensus, again, as it usually is, just like stocks, is bullish. And people want to say that the 4-year cycle is dead and that, it's up only and we're going back to the moon and all this good stuff. I'm struggling. So, I was on record a year ago in January, which was not very popular, saying that the 4-year cycle was alive and well, and actually that it wasn't a 4-year cycle. It's actually, I call it 3.11. It's 3 years and 11 months. And that's because it's based on the number of blocks, not on a calendar. And so, December of 2017, November 2021, October 2025, that cycle has played out exactly as we would expect. And it didn't get quite as high in terms of, I thought we'd peak at around 150-ish based on, and the logic was that in the previous cycles, 17 and 21, we got to 2 times fair value. So fair value is determined by the Metcalfe's law model that Tim Peterson and others run. And so in 2017, fair value was 10. We got to 20 before we crashed all the way back down to 3. Then in 21, fair value was 32, 33. We got all the way to 69. Now, why do we get so much above fair value? Humans are going to human. We get greed, we get, leverage. And when leverage is abundant, you can get very much above fair value. And that's why you then need a big crash. Because when you start the crash, in theory, if you're 2 times above, you only need a 50% correction to get back to fair value. But markets aren't that precise. They crash right through fair value and then go to the depths of despair. So long story short, in this 311 cycle, we get about a 360-day period that is crypto winter. And crypto winter lasts from the peak to, the next year. And in the 17 and 21 cycles, we had about an 84% drop and then a 74% drop. I argued that this time we were only going to get to about 50 to maybe 60% above fair value because there was less leverage. They'd taken some of the leverage out of the system. We didn't even get that far. We only got to 125. So we only got to about maybe 35, 40% above fair value being around 91. So long story short, the correction needed to be less. And so from 125 all the way down, I think we hit 80 at some point. That's a pretty meaningful correction. That's below fair value. So could we be stuck in this meandering range for the duration of the crypto winter, which would come sometime, September-ish, August, September-ish of this year? Yeah. So whether we stay in a range between 80 and 100 or 80 and 95 or 75 and 105, I don't really know, but I think that's possible. And so while it's certainly bullish when prices recover and rise, I don't see the momentum that you need to push back into a bull market until we clear out some of the tourists, I guess, the tourists who come in and lever up.
Interesting. So I guess first question here is like tourists. I mean, I guess right now, a lot of the interest has come from institutions on the side of the ETFs, right? What we've seen with the ETF inflows recently. So that seems to be coming back. I think in terms of retail, this cycle has been way less retail participation in all parts of the crypto market. So, I guess in this case, I think that a lot of the leverage was also being taken out of the system, cleared out at the end of last year after 10-10 and all of that. And I think that right now, I guess the question is, what exactly are you wanting to see from a metrics perspective to sustain the rally to back to the all-time high of 125K? What sort of data points are you looking at?
So here's where I come out. So the fair value, right, from Metcalfe's law has to do with the number of nodes, the number of transactions, the transaction size. So the actual usage, the growth of the Bitcoin blockchain network. And that number is determinable. And you can look at Tim Peterson's website and he'll tell you what it is. And that number will increase over time. Now, it tends to be impacted clearly by things like interest rate cuts and global liquidity. So look, China is increasing money supply. That's a positive. That will be offset a little bit by, we have two phenomena that happen around the early part of the year. One is Chinese New Year. So we get a little negative impulse every Chinese New Year because people in China need to fill up the red envelopes with money. So they sell some Bitcoin, and that puts a little pressure on. The second one is around tax day in the US in April, where if you've had a good year the previous year, you get some weakness. And we saw that really in 2025 2024 was such a good year that people had to pay a lot of taxes. So we saw a big drop in April before we made that final spike to the high at 126 over the summer, which was the normal pattern for a 311 cycle. So I think where we are today is, your point is exactly right, that institutional interest has ramped up. The problem is it's not all accumulative. What I mean by that is everyone reports on, this big hedge fund bought $2 billion of IBIT. Yeah, but they're short $2 billion of futures against it because they're a market neutral hedge fund. They don't go long things. They take advantage. They carry trade. And it's really not such carry trade like the Japan carry trade. What it is a futures roll yield capture. So the futures price is always higher than the current price because people are optimistic, right? So when the future, well, it's not always, but generally speaking, it's higher. You can have commodity markets invert, but most times the futures price is higher and it rolls down the curve over the course of the month. So there is a return, a riskless arbitrage to capture if you short the future and go long the spot. And it happens in all commodity markets, whether it's corn or oil or gold. The problem is, remember when Bitcoin was deemed a commodity and everybody cheered because it wasn't a security? I'm like, be careful what you ask for. You might get it. That was not random. That was not unplanned. That was specifically designed to allow what's happening now, which is when you deem something a commodity, the big dogs can make a lot of money on this roll yield trade, and they can spoof the price. That's been happening in the gold markets and the silver markets for a long time, where the big guys like JP Morgan will short as much as they can against the long, whether that long was an ETF or whether it was other producers like gold miners or silver miners. And so what you'll see over time is the price tends to be stuck in this range. Remember when GLD started and everybody said, there's going to be this demand for gold and gold price is going to go up. It didn't go up. It actually just stayed flat. And same thing with silver. It stayed flat. Well, then what happens? And everybody says, but gold rallied a lot last year, or silver's rallying a lot. Yeah, because what happens is once the people who are short get squeezed, right? The price starts to bump up against where they're short, and suddenly they have to cover. You get a parabolic squeeze. We saw that in gold last year in August, where there was a big short squeeze. We went from 3,300 all the way to 4,400. We're seeing in silver right now, like every day, silver's up another 10%. And because shorts, there was a report, I don't know if it's real, but that JP Morgan had been short about 2 times global silver production. That's a big short. And they were having to cover. There was an argument that they were out of business. I don't think that's true, but I think they lost a lot of money. And one of the challenges of Bitcoin is this same phenomenon, is as great as it is to have people buying the ETF or institutions buying spot, the problem is the future. And it's not a coincidence that literally to the day in 2017, December 18th, was the day the CME released futures was the peak. It's not a coincidence that November 6th, 21 was the peak, the day the CME increased the options on futures. So that isn't a coincidence. And there's a very famous interview by this guy, Leo Melamed. He was the former CEO of the CME, Chicago Mercantile Exchange, and now he's chairman emeritus. And he said in 2017, I thought it was a very interesting word. He said, don't worry, we'll tame Bitcoin. Tame? That's a funny word, right? Why are you using that word? Well, he was right. The big dogs can hold the price down. And so I would not be surprised at all if we just stayed in this kind of funky zone, whether it's 85 to 100 or 75 to 95, I don't really know, but stayed in this zone and the spoofing just keeps happening. But at some point later this year, we break the ceiling and we get into a parabolic short covering rally. That wouldn't surprise me.
Yeah, it's a very interesting theory. indeed the case that this cash and carry trade was a big part of what was happening last year with the ETF flows. I think, though, this year, I must correct me if I'm wrong, but I think that the ETF inflows, at least over the past 3 days, have coincided with record low open interest on the CME. So one would hope that this is just accumulation with people who are actually bullish on Bitcoin rather than running that trade. But we'll have to see how it plays out over the next few weeks. But you touched on something earlier, and that's money supply, especially coming out of China. And indeed, like many people point to liquidity as one of the most important drivers. And you've said that markets are driven more by liquidity than fundamentals in the short to medium term. And indeed, global liquidity is something that many on crypto Twitter have been pointing to as a reason why 2026 will be to the moon, stars and all. So how's your read on the whole global liquidity question? I mean, there's obviously what's happening in the Fed. There's a potential easing in the Q1, new Fed chair, this bank reserve ratio. They've started a bit of, albeit a little bit of QE last year. So how are you reading the global liquidity?
Cross-border capital does the best work on this, and their liquidity index is solid, but not like super robust. We're probably more mid to late cycle in liquidity. As I said, China is stepping it up a little bit, but the US might cut a couple more times this year. Even if I'm sure Powell is going to be out. Here's the crazy thing. Jerome Powell has basically abolished recessions. I mean, he's done one of the most amazing jobs of Fed chair we've ever seen. He's got record high asset prices, stocks, real estate, gold. And yet Trump wants him out. I'm like, why aren't you celebrating this guy? You put him in office, right? And yet you act like this guy's a pariah, maybe the best Fed chair ever. I mean, it's hard for me to say that out loud, but the data supports that. And so I think it's interesting that somehow people think we're going to get some super dove. Jay's been a dove. When Jerome took office in 2016, he was a hawk, right? Buttoned up tie. He was a hawk. And then he became Jay the dove. He finally got bullied into cutting rates in 2018. Well, then in 2020, he became Jay, the letter J, the pusher, right? He was wearing a hoodie and a backpack, handing out stimmy checks to everybody. And then he went back to kind of Jay the dove, a little bit of Jerome hints, but stayed Jay the dove. And now he's almost back to Jay the pusher. Not quite, but I don't know that we're going to get anybody who's going to cut a lot more. The real problem with cutting interest rates at this point is GDP growth is too robust already. The problem is not demand for credit. The problem is that the GDP is basically being driven by one thing, and that's AI data center development. If you took that out, we'd have no GDP growth. So that's a long-winded way of saying I don't think liquidity is going to be that robust this year. I think 2026 is likely to be a cycle peak for equities broadly, globally, and liquidity globally. The other thing, and I'll talk about this in my 10 surprises, we've actually never made a new all-time high in Bitcoin when the PMI was below 50, meaning the manufacturing, was not in expansion. And we're, unfortunately below 50. So I just don't, as everyone keeps talking about how robust this recovery is in the US and, 3% growth, and maybe we'll even hit 4% growth in Q4. Like, yeah, but it's fake, right? It's building buildings and filling up with computers that you're depreciating in 1 year. Yeah, that looks good on paper, but it's a little bit of the broken window fallacy. You break a window, that doesn't count against GDP. You fix the window, it counts for GDP. Okay, but building a data center, yeah, that's construction. But I'll give you a good example. So everyone's talking about this productivity miracle that AI is supposed to give us, right? So I said, I'll save myself some time in doing my presentation. Okay, ChatGPT and Grok and DeepSeek, give me an infographic of the consensus for 2026 across the different asset classes. Pretty simple, right? Takes me a few hours to put that together. I thought it'll be able to do it in seconds. Oh my God, It was the worst thing you've ever seen. I mean, misspellings, garbage words. ChatGPT said, oh, bullish on gold. And we think the range will be from 2,400 to 2,600. And I type back in, but you realize the gold price today is 4,400, right? Oh, yeah, you're right. Let me fix that. And when it fixed it, it kept the same number at 2,400. It's just not that good. So I get it that someday I'll be able to say, hey, AI agent, make my presentation, but it ain't today. It's just not happening. So I think there's a lot of things that right now look like tailwinds that are going to turn into headwinds kind of middle of this year, and that it's going to get tougher and tougher to be in a bull market, broadly speaking. And I just don't know that central banks have enough, bullets in the chamber to really fix things, because interest rates are already pretty low. And I don't think, generally speaking, companies need more debt. Actually, I saw an interesting stat this morning that people are using credit default swaps in size to hedge against an AI debt bubble bursting. Because one of the dirty little secrets about this AI bubble is a lot of it's being financed off balance sheet with debt. Like if you look at Oracle, remember Oracle went way up on that big deal with
CDS spread
OpenAI?
just completely spiked. And I know Meta recently completed a massive 40-year bond issuance, which is crazy. These are tech companies that previously had been incredibly profitable, and now they're incredibly indebted just to build out data centers, right?
Yeah. And so Oracle now has given back all of that post OpenAI deal, and their debt to equity ratio is the worst of the lot. Like kind of technical insolvency if they had to try to pay their debts, let alone service their debts. So I don't know. I don't think, Meta or Google are suddenly going to be out of business. They're very profitable. They have lots of cash flow, but they also have a lot of debt that they didn't used to have. And I think it's interesting. Markets are very interesting. Remember when Europe had the big debt crisis? There were a lot of people who made a ton of money buying credit default swaps. And go all the way back to the tech crisis, there were a lot of people who made a lot of money betting against the over-leveraged tech companies back then. And then in 2008, people bought AIG credit default swaps and Fannie and Freddie, or phony and fraudy, as I like to call them, credit default swaps. So when people start buying protection, you should pay attention.
Very interesting. This is obviously something that you've talked a lot about now, the AI, and you've actually said in your recent Around the World YouTube video that you basically think faith in AI and this AI boom is exceeding the dot-com bubble. And of course, all these fears that we're now emerging. So do you think that if it is a bubble, we'll see it so-called pop this year? Do you think it's got still, how long can it actually continue inflating by? Do you think it will have a blow-off top in the AI?
It's so hard to predict. Bubbles usually inflate longer than you think they can, right? The market can remain, irrational longer than you can remain solvent, the famous Galbraith quote. So it's hard to predict. I do think, look, people are going to think I'm crazy now. I actually am a big believer in, Sam Brennan, the guy, the farmer from the 1800s who wrote the book. And he put this chart together based on the sun, moon, and stars. And you're like, come on, Mark, stop. And people are going to go crazy on this one. One of my favorite market anomalies is if you invested in the market, in the equity market, on the new moon and sold on the full moon, right? You would make 1,400 times more money. Not 1,400, percent. 1,400 times more money than if you just left it in all the time. So you basically invested half the time. And people say that's impossible. That's ridiculous. Well, just do the math. I mean, there are a lot of people who've done the study, and it's just pretty simple, right? You're in the market 2 weeks, you're out of the market 2 weeks. It says that makes no sense. Well, you look at this model that Sam did back in the 1800s, and he was a commodities trader. He was a farmer that turned into a commodities trader. And it basically follows some logic in that there are cycles. And we've all experienced them. There's business cycles, there's liquidity cycles, there's long duration cycles, there's power cycles, there's generational cycles. Well, the cycles have to be based on something. And he said it's based on the movement of the sun, moon, and stars. So, whatever. And this time of year, everyone's talking about astrology and the forecast for the year. There's this one guy I follow in Hong Kong who does all his stuff based on the Chinese astrology. And he's amazingly accurate. And he predicts geopolitical stuff that you would never be able to say, come on. But he's pretty good. Can win, NG. Anyway, the point there is that all says 2026 is the peak. Now, does that mean December 2026? Does that mean October 2026? Who knows? Usually bad stuff starts to happen in September, October. September's the worst month. October's the second worst month. So, I get a little nervous about that. I do think we're in a bubble. I mean, look, companies shouldn't sell at 30 times revenues or 40 times revenues. They shouldn't even sell at 30 times or 40 times earnings, but 30 times revenues, just crazy. But the problem we have is today 60, this is a crazy stat, 60% of money is in passive index funds. Now, passive index funds are dumb. I don't mean unintelligent. I mean, they are rule-based, meaning they are not allowed to think. Every 2 weeks, everyone's money from their 401k or 403b goes in and it has to buy. And so it can't say, gosh, should I buy NVIDIA at 30 times revenues? Does that make sense? It just says I have to buy 8% NVIDIA because it's 8% of the index. And here's why that doesn't make sense. So look, we just had a very nice New Year's Day present. So we were early investors in this company called Grok, Groq, not K. Grok makes TPUs, tensor processing units, right?
Tensor processing, yeah.
Which are the next generation after GPUs. And then Grok has something called an LPU, which is a TPU designed specifically for LLMs. Long story short, Gemini in December announced that they trained Google announced that they trained Gemini all on TPUs, no GPUs, no CPUs, all on TPUs. So NVIDIA called up Grok and said, we're buying you. And they're not exactly buying them. They're kind of buying the team.
License agreement, yeah.
It's a little, but still $20 billion. So good for us. Our investment was, when it was much less than that. So we're all excited about that. That's great. But wait a second. If NVIDIA is buying TPUs or TPU technology, does that mean the days of GPU dominance are over? I don't know. It could. And I'm old enough to remember. Look, I'm old. I got white hair to prove it. So I remember 1980. That's a long time ago. 1980 had the cover story of Time magazine. It was the year of AI. Let that sink in for a second. The year of AI. We barely had computing, okay? So it wasn't much of a year. In 2000, we had Intel stock over the previous decade go up 20 times to its all-time high because they were going to dominate AI. And today, they're down 75% from that point, 26 years ago, okay? So AI is not new. I mean, it's a 71-year-old technology or nomenclature. And basically, we got a little better version of Clippy today than we used to, because now you can talk back to it. And there are some other applications that are good. But at the end of the day, Intel was going to dominate because they dominated CPUs. But then GPUs came along. And at first, GPUs were used for my kids playing video games. Like literally, I had to go buy this GPU board that my son needed to play his shooter game. And then they figured out, well, we could write some software and do some stuff, and we could do simultaneous, computation in parallel as opposed to sequential. Okay, that's better. CPUs and GPUs are focused on code, words, and a little bit of images, so they're a little faster. But those are both two-dimensional. The brain, real intelligence, that's why I get hung up on the word AI. It's artificial, but it's not intelligent, because the brain doesn't work in 2 dimensions. It works in 3 dimensions. And, we had a lot of things, you had a lot of things you wanted to talk about. And you're like, this guy just keeps talking about stuff I don't want to talk about. But our brains just don't work in a logical sequential way. They think three-dimensionally. Well, TPUs actually function in three dimensions. They do matrix multiplication in a way that allows for faster processing, for inference. And the best way to explain it is if we were training our model, if we were reading a book, takes you a week, takes me a month. It doesn't really matter because at the end of the period, we both get the same information. It's better to do faster, but training is not that important. So, speed is not that important. If we're both standing on a street corner about to cross the street and there's a car coming, we better be able to make that inference, that decision really quickly. And we got to have that three-dimensional math in our brain, figure out how fast is the car coming, how fast am I? Inference matters. And so TPUs and ultimately VPUs or something else, I think are going to be more valuable. And so is this the moment, right, for NVIDIA? I don't know, but it's interesting. And if you go back to 2000, there were a bunch of these types of M&A deals where Cisco bought their competition to try to protect themselves, and Microsoft bought some competition, and Intel bought some competition. When you start buying your competition to protect yourself, it usually means new technology is about to take over. So again, long-winded way of saying, I think we're on an inflection point. I do think we're going to see a new sort of development area. And another area we haven't even talked about is photonics versus electronics, in that, part of the challenge of AI is all the power that you need and all the heat it produces and the cooling. Well, if we change from electrons to photons, which is harder, but not impossible, then computing, or if we did biological computing, like what the brain really is. Here's the crazy thing. Think about how much demand for power they're saying ChatGPT needs. Our brain uses one light bulb, 24/7, 365, 80, 90 years, 20 watts. How is that possible? Well, because it doesn't need the same amount of electricity to do processing and storage because it's a biological system. When we tap that, things get really interesting.
Really interesting here. So basically, you kind of poo-poo in the whole idea of we'll be anywhere near AGI given the constraints we had right now.
No, and that's a really important point. Geoffrey Hinton, genius, Nobel Prize winner, way smarter than me, but he's the father of AI, right? And all these people that worked for him now have all these big multi-billion-dollar companies. There's this interesting story. So Geoffrey used to be at City College of London. And across the hall from him was this guy, Carl Friston. And Carl was a neuroscientist and Geoffrey's a computer scientist. And they would kind of go at each other. And Carl would say, hey, Jeff, your whole idea of basically brute force, doing more calculations with more power is not right. That's not how the brain works. The brain is actually elegant in its ability to only do the work it needs to do. Like right now, behind me, there's all this stuff. And your brain is ignoring it because you're listening to what I'm saying or looking at my facial expression, but your brain doesn't have to process all that stuff behind me because it doesn't need it. A computer can't do that. A computer has to process everything all the time. And that's just really inefficient. And so that ability to selectively decide what's important information and ignore everything else is intelligence. And so brute forcing calculations and hoping that you get an answer is not intelligence. So AGI to me is just marketing spin and nonsense. No way in my mind, in the approach we're using today, the Hinton-esque model, can we ever get anything that resembles intelligence. We can get faster processing. They're way better at doing math than I am. They're way better at getting data off the internet than I am because it can read faster. But like I said, if I asked it to make me an infographic, it's horrible. I could do it better myself manually, believe it or not, which is crazy, because it can't think. It can only brute force process.
No, that's true. It'd be really interesting to see how this plays out between, the TPUs, would you say, are way more efficient, and the GPUs, and how it impacts NVIDIA's NVIDIA itself. I think that NVIDIA is also releasing a whole bunch of chips now, trying to catch up with the
Yep.
TPUs. They released it today, actually. So let's assume that, and this is just one of the examples you've mentioned, like this whole idea that AGI is way further away, but there's also the questions around circular financing, whether they're
Oh,
subsidizing the cost
yeah.
of compute.
Yeah.
They're subsidizing the cost of compute. All of these things are leading to questions around whether this is sustainable, diminishing marginal returns on all of these models. So let's assume hypothetically this year that October, November, something according to the astrology, which seems to be quite accurate, that you seem to allude to. Let's assume that we do have a massive collapse in the AI bubble and all of these hyperscalers just sell off big time and
Yep.
NASDAQ collapses. Do you think that Bitcoin will get caught up in this and dragged lower?
Great question. Great question. So the short answer is short term, yes. Long term, no. Depending on how much leverage is in the system, meaning the overall system, not just the Bitcoin system, but the overall system, will determine how much Bitcoin, gold, bonds, et cetera, give back during that deleveraging. The negative side of that is today, margin debt is the highest it's ever been. Now, margin debt as a percentage of market cap is not the highest it's ever been. So it's still a high number, but it's not as a percentage super high. So that's one negative, not super negative, but one negative. So, and why does that matter? Go back to 2000. So remember 2000, the world goes crazy. They run this drill and say everybody locked down and the markets collapse. And Bitcoin fell 50% in 12 hours, right? 50% in 12 hours. Everybody said, see, it's totally correlated. I'm like, no, it's not correlated at all. And within a very short time, Bitcoin was back, and it took stocks a while for them to, print the money and start the rally. But Bitcoin bounced back really quickly. Why? Well, when you get a margin call, right? If you own a bunch of stocks and you have borrowed against them and you get a margin call and the stocks are down, well, you can't sell the stocks. So you got to sell what's not down. Well, what's not down? Cash, gold, bonds, Bitcoin. So all of those things fell in those first couple weeks of March in 2020, just like stocks. And everybody said, see, correlations are one. Like, well, duh, in a crisis, all correlations go to one. But then something interesting happened is they diverge. And bonds went back up and Bitcoin went back up. And if you bought that $5,000 bottom, that was a pretty good buy in March of 2020. Same thing with oil stocks. Everybody thought, oil price went negative in April for a couple, hours. Crazy. You had to pay people to take your oil. So long story is ultimately, I think the same thing will happen if we get an unexpected decline and a deleveraging. People will be forced to sell Bitcoin, gold, whatever, and pay their margin calls. But the difference is, I don't believe Bitcoin is a risk asset. I don't believe that people that own it to speculate like they do NVIDIA or Microsoft or other tech stocks. I own Bitcoin as a savings technology. It's the greatest savings technology I think the world has ever seen, because in normal savings, right, you put your money in the bank and you put it in a low risk asset to save it. And every day the government steals part of it back from you through this thing called inflation. That's a crappy system. It's theft. Then what do? Well, I would invest it. Okay, well, if I want to invest, I have to take some risk. I have to take equity risk or credit risk or innovation risk, and I can get a higher return. But the nice thing about Bitcoin as a savings technology is I can take it off grid, out of the system, and save it. And every day that government creates inflation to steal my wealth from my fiat, I get an increase. Now, it's a similar thing with real estate. I use the example of my house, right? According to Zillow, my house is worth twice as much as it was 5 years ago. My house didn't grow. It didn't get more efficient. In fact, it actually wore out a little bit. I had to put money back into it. So it really didn't appreciate. What happened is the money got worse. We've printed 80% of all the money in the United States. We've been a republic for 249 and a half years. 80% of all the money in that 249 and a half years came in the last 5 years. Crazy. So we've devalued the currency by a lot. That's why gold's up. It's why silver's up. It's why Bitcoin's up. It's why houses are up. Because as we devalue the base currency, the asset that you own that has to be denominated in something, like use gold. 1 ounce of gold has been 1 ounce of gold for 5,000 years. Hasn't changed, right? But the value of that 1 ounce of gold has changed. It's interesting. It's been exactly the same for 5,000 years, meaning 5,000 years ago, you could give someone an ounce and you got a fine person suit. Today, you could give someone an ounce and you get a fine person suit. It's really quite interesting. Now, Bitcoin, one Bitcoin's one Bitcoin, but we don't price Bitcoin in Bitcoin. We price it in dollars or yen or euros. Let's take today. So today people cry, oh, you should have bought Venezuelan stocks on last Friday before the thing happened. Oh, okay. So you bought Venezuelan stocks, but yes, Venezuelan stocks are up 75% in like 3 days, but the currency's down like 99.9%. You actually lost money. And in fact, in my office in the other part of the house, I have a 100 trillion Zimbabwe dollar bill. Like literally 100 trillion, lots of zeros. It wouldn't buy a loaf of bread. So I'm a trillionaire in Zimbabwe, but I couldn't buy a loaf of bread because the value of the currency goes down so much. In fact, there's no time in history where you want to have your market be the best performing market parabolically, because that means your currency is getting cremated. It happened in Argentina. It happened in Zimbabwe. It happened in Venezuela. It happened, in Turkey. You don't want to be a Turkish billionaire because your currency is down 98%. So the same thing is true here. Is I believe Bitcoin is a different use case. It's a better form of money. Money is an asset that exists in the absence of a liability. There's really only one. I mean, there's two, silver and gold. But gold is really the core. Silver is kind of secondary. Bitcoin is a better form of gold. It's equally scarce and it's more portable and more divisible. Simple example. If I had a bar of gold, which, maybe I have one lying around somewhere, but if I had it right here, I'm not strong enough to break it in half. I'm just not. Even if I could break it in half and try to send you half, I couldn't stuff it in my computer, right? But I can pick up my phone with a couple buttons. I can send you Bitcoin instantaneously. It's just a better form of money. And money is different than currency. Currency is backed by fiat, backed by debt, and governments like it. And it's a perfectly good thing. And we live based on it. But it's fallible in that it can be taken away from you. And it is taken away from you every single day, whether you live in Australia or, US or Europe. It doesn't matter. The governments are taking it away by printing more of this to fund their spending habits. So I will argue Bitcoin in the short run might go down, but over the long run, the response to that type of market correction will be more money printing, which means more value accreting to Bitcoin.
Yeah, he touched on many things there. So I think the main takeaway point is, of course, that Bitcoin has no top because fiat has no bottom.
Exactly.
But it's interesting that you make the analogy and even say it potentially a better store of value than gold in terms of its ability to be sent easily. But as we saw last year, there was a divergence in the price of gold and Bitcoin. In fact, gold outperformed Bitcoin considerably over the year.
Well, over any 12-month period, and that's an important point. Over any 12-month period, anything can happen. I will argue what happened in gold last year was simply a short squeeze, right? You had a bunch of people, because remember, gold was basically dead money for almost 5 years. I mean, it was dead flat and Bitcoin was going up. And you said, well, why isn't gold going up? Well, gold was being spoofed. In fact, 3 years ago, JP Morgan had to pay $1 billion, well, 960 million, but almost $1 billion, $1 billion fine for spoofing the price of gold, which is illegal. And they're like, yeah, but we made 20 billion. So it's like a cost of doing business. So once they lose control of that trade, you get a parabolic move. And so Peter Schiff got his day where he could say, but if you back up any meaningful period, back up 2 years, back up 3 years, back up 5 years, back up 10 years, Bitcoin and gold are roughly equivalent. Bitcoin's a little bit better. If you go back further, and we just had the 17th birthday the other day on Genesis Block Day. And look, the first 5 years, they don't really count. Everybody likes to look at the big numbers and the thousands of percent. Like, no, those first 5 years, as I think it was Hal Finney, maybe it was Satoshi, I can't remember which one, said, I think it was Satoshi actually, in an email said, I can see in 30 years, there'll either be lots of transactions or zero transactions. So, Bitcoin pizza guy, I love this guy. Everybody's like, oh, such an idiot. He shouldn't have sold. Like, well, no, we all owe him a debt of gratitude because he proved that Bitcoin could be used for that transactional value as well as a store of value. And what it did is it took us out of we'll call it the science project phase into the reality phase. So I'll argue the last decade, maybe the last 12 years, but the last decade for sure is real. And that growth rate is pretty significant. Now it's trending down. It follows a parabolic curve. So we're not going to go up 60% forever linearly. We're going to go up 60, then 50, then 40, then 30, then 20, because it's just the law of large numbers. And that's the way parabolic growth works. Ultimately, the market cap, the total market value of Bitcoin will continue to rise. I will argue will eventually hit gold equivalence. And gold equivalence, gold today is like 30 trillion. Half of that is the monetary value. Half of that is the, industrial use and the jewelry and all the other value. But 15 trillion from kind of 2 trillion today, that seems pretty simple to me. I mean, that's a no-brainer. Then what happens is, well, then do we become money for everyone? Like, does Bitcoin become the ubiquitous monetary unit globally in a, future world that we probably all can't really imagine yet? Yeah, it probably does. And then we're talking about 120, 150 trillion, something like that. That's a big number, but it won't happen tomorrow and it won't happen next year and it won't happen in 27. It's going to take time. I mean, I will argue 10 years in to a 30-year adoption cycle. So we just finished the first, early adopter cycle. Now we go to the early majority, the knee of the curve, and then we get to maturity, 10 years from now.
Got it. I just want to come back to something you said there around your view around why gold outperformed last year. And that's because the short squeeze, JP Morgan manipulating the markets and all that. I'm just curious because another argument gold bulls will have had is that, indeed, it was seen in the data, was the debasement trade, Russian supply out of Ukraine since the Ukraine invasion, and then also more specifically, central bank accumulation because of concerns around weaponization of the dollar. So you don't think any of that had that much of an impact? It was all just structurally a short squeeze?
No, I think that's a great point. I think it's a fantastic point. And I love how data dependent you are, right? I mean, I love that you've done all the research on things like CME volumes and the central bank purchases are absolutely important. But again, we're talking about kind of stock versus flow. I mean, the problem with gold is the stock relative to the flow. I mean, not the problem. The reason gold is so attractive is the stock relative to the flow is very high. Now, the reason Bitcoin arguably is better, the stock to flow is even better because the flow keeps getting cut by the halving. The challenge with gold is, we could discover a new mine or we could have an asteroid crash down with a bunch of gold and suddenly there's more gold. That's uncontrollable. With Bitcoin, it's controllable, right? We know there's now, yes, the group could decide to change, but consensus would have to do that. But the bottom line is gold clearly is in demand. And I think for all the reasons you mentioned, geopolitics and particularly the thing that's not talked about a lot, China is monetizing the renminbi using gold because they want to be the world reserve currency. Today, the renminbi is one of the world reserve currencies. The world reserve currency is the dollar still for a while. I will argue that China wants that to be the case for the renminbi. And ultimately, I think it's Bitcoin, but I do think China gets their day. And this all goes back to history, right? The first world reserve currency was Portuguese, which say, what the hell, Portugal? Like, yeah, but they had the most powerful navy. And then the Spanish took them over. They had the most powerful navy. Then the Netherlands. Now, how did the Netherlands defeat the Spanish Armada? The Netherlands is about the size of Ohio. They didn't have any ships. Well, they created the first central bank and they printed money out of thin air and they hired a bunch of mercenaries to create a force to beat the Spanish Armada. Okay, so now they're the most powerful. All right. So then the French took them over because that's this guy Napoleon. He's a pretty good general. Well, then the British conquered the French because they had the steamship. And then we got nuclear power and we've been dominant really for a while. How is China going to win if they only have one naval warship, one aircraft carrier? They figured out a decade ago, I believe, that the next war will be fought with chips, not ships. So all of the cyber dominance and all of the reshoring of semiconductor manufacturing from Taiwan into China. See, everyone thinks Taiwan is the center of chips, and it is for these, right? But for everything else, it's mainland China. For all the big chips that are in our cars and in our appliances, that's all dominated by Huawei and other companies in mainland China. So they figured out that chips are more important than ships. And so I will argue that they will have their day of being dominant and being the dominant superpower because they dominate AI, they dominate 5G, they dominate everything.
The world's biggest shipbuilder as well. Talk about dominating.
And that too, right? They do build all the ships. So even if we wanted, if we want to move stuff around the world, it's all about China. And I love when Trump said, we're going to become a nation of shipbuilders. And I'm like, Donald, China built more ships last year than we've built since World War II.
It's crazy.
Crazy.
Yeah, it's really fascinating to find an American is super bullish on China to the extent you
yes,
are.
It is. Yes, it is.
I know you are a very big China bull, and you've. It's also interesting because I think Chinese equities are, one of the most. I think you mentioned on the podcast recently, one of the most oversold assets, but one of the most highest value right now in terms of.
It is. It's extraordinary how anti-China U.S. is right now. And look, the U.S. Again, we've been a republic a long time, 249 years. We always have to have an enemy. And so, the USSR was an enemy for a long time. And now it's China. And we do a really good job with propaganda. I mean, we are awesome at propaganda. If you ask the average American, which stock market did better last year, US or China? Everyone, and I'm not exaggerating, everyone would say the US. Everyone. It's not true. Chinese stocks were up 2 times, not 2% more, 2 times more than US equities. And so it's not true. There's one guy, David Tepper, right, from Appaloosa. He's super long China. So he would not agree. And it was funny. He was on CNBC and he just released his 13F and he had all these Chinese stocks. And Becky Quick asked him, aren't you worried about the Trump tariffs? Shouldn't you be hedged? He says, I am hedged. My hedge is I don't care because what they're doing in China has nothing to do with the tariffs, right? They are dominant in areas that are domestically focused. And I tell the story all the time. So there's a company, Cisco, SYSCO, that you see the big trucks, they deliver the food. And in America, basically, if you go out to a restaurant, the quality of the restaurant is just how good they are at heating up Cisco pre-prepared food. China didn't have Cisco because they were never going to let Cisco in China. So there was an opportunity to invest in the Cisco of China. I might come in, right? And the funny thing is, we were in good company. I mean, the woman who backed the company, she passed the hat and she got 50 million from George and 50 million from Bill and 50 million from Jeff. And if I can use one name, and you're a pretty smart guy. And I'm in, right? I mean, and that thing's going to end up being like a 10 bagger or 15 bagger, but it's a dumb business, right? Delivering food to restaurants. It's not really sexy or exciting, but it was just moms and pops and it was a perfect roll up. Long story is there are things that are going on in China that you can't comprehend, one, unless you go there. Like that drives me crazy. I have people who hate China, hate everything about China. Like, well, have you ever been? Well, no. Well, then how can you hate them? How can you even have a view if you've actually never been in Shanghai and looked around and just marveled at the progress and the fact that you're looking at 420-story buildings and they look like they're 10 stories high because they're so tall right next to each other. I could go on all day, but look, I've been investing in China for a very long time, since the 90s. And the first 10 years were not very fun, right? I always said the local municipal tax always equaled our profits. So they never stole our money, but they just never let us make any money. And we invested in some amazing companies, Cherry Automotive, but we could never make any money. Then we figured it out. You basically had to partner with the sons and daughters of their version of oligarchs, right? The princelings. So we did, and it was super profitable, and we made a bunch of money. Well, then everybody figured that out, and too much money flowed in, and the returns went down. Well, now there are these amazing entrepreneurs, but you got to be on the ground. You got to speak the language. And so I've had a team on the ground in China since 2007, and I don't speak. I mean, I can say "xie," that's about it. I marvel at the entrepreneurial spirit, the growth rates, the 96% of citations in AI came out of China. 96%, like not 9.6% or 56, 96%. Now, that doesn't mean we don't do good stuff in the US in AI. It just means that at the core, right, citations in research, it's happening in China. And the stat I always fall back on, in America this year, we will graduate in May, we will graduate 450,000 STEM engineers, science, technology, engineering, and math. China will graduate 4.5 million. And everybody says, oh, but they're all at lousy schools. Like, fine, let's say half are at bad schools. Not true, but let's say half. That's still 5 times more than us. And so it's highly likely that some of those engineers are going to create really interesting things. And so a lot of innovation happening there, a lot of upside. And yeah, it's been rocky. And, every once in a while, Xi will do something like when he, beat down on the education companies. Still not sure why that happened. And they can confiscate things faster in a command and control economy than we can in a democratic republic. But at the end of the day, fascinating place to invest. And I know you're much closer to it than I am, but.
Yeah, I mean, what's the saying? China thinks in 100-year increments, right? And talking about the crown jewels of technology, recently, I don't know if you saw the news that I think last year, BYD overtook Tesla in electric vehicle sales.
Yes.
It's crazy.
Oh, yeah. It is crazy. And it's not a bad thing, right? It's not zero sum. When you're talking about innovation, it's positive sum. We're creating new things. And Elon's going to keep running, and he's going to keep innovating. And although Elon doesn't really innovate that much, he's pretty good, quick copier. But he didn't start Tesla. He didn't start SpaceX. I mean, he's done really well as an investor and as a leader and as a CEO. But he's not really an innovator per se. The people at BYD, the engineers at SpaceX are really good. The engineers at Tesla are really good. The engineers at BYD arguably are as good or better. And, it's okay that both are good. That's the part I just never understand. Like why we have to, it's like if you live in a zero sum world, I always use the example, let's say you and I would go out with our significant others and I say, to your spouse, you look really nice tonight. My wife hears, I look like crud. No, that's not what I said. I said she looks nice. I mean, come on. I mean, it's a plus. We don't have to have a minus. And so we can say BYD's great. That's not saying Tesla's bad. Now, maybe Tesla needs to catch up, but we can say BYD's great. And we can say that, what's really interesting, Warren Buffett, right? Who says doesn't like international companies, doesn't like commodity companies. He owns BYD, which is kind of funny. I mean, he doesn't own Tesla.
Yeah, that's crazy. Yeah, it's indeed the whole concept of world trade is not zero sum, which is what it seems to have been put through that narrative, especially with all the tariffs last year, attacking China as if this insecurity, as if China is going to, if China wins, we're going to lose. It's crazy.
No, but again, that was all the taco, right? That was the Trump always chickens out thing. Is like, look, if I threaten something and then I back off, the market will rally. And look, he's done a masterful job of manipulating the market up. And look, we have to. My brethren and sister, all the boomers, we have a problem. I mean, we have this asset, 401ks and 403bs and home equity, and we need that to survive because the entitlement programs we've been promised aren't funded. So we need there to be, wealth created. And so pushing prices of things up and creating more of those currencies, it's totally logical. Now, why we need to, piss on the competition to do it, well, that's just the nature of the beast, right? Always been
Yeah,
that way.
no doubt. Well, thanks a lot, Mark. This has been a really engaging conversation. I mean, I had way more that I want to talk about, but
I
indeed,
know. We'll,
we
we'll
covered
do
so
it
much ground.
again. We'll do it
We'll do
again.
it again. Yeah,
We'll do a mid-year update,
your
and
update. Yeah, and
I
hopefully
promise not
the AI
to.
trade is. Hopefully, we wouldn't have the AI bubble hasn't popped just yet, and Bitcoin will have been above its all-time high. But thanks again, Mark. I will leave links down below to your Twitter and your website as well, so our viewers
Awesome.
can read your thoughts there as well. Is there anywhere else they can follow you in terms of your thinking or your?
I'm around on the internet. I have a unique name, so if you Google me, you'll find me pretty easily. I spend a lot of time on Twitter. I do a lot of podcasting. We have a monthly show around the world that you mentioned. We have a weekly show called Digital Currents. Lots of content out there if people are interested.
We'll leave some links down below. Thanks again, Mark. I really appreciate it.
No, it was fun. I look forward to doing it again. And again, Happy New Year.
Happy New Year, man.